What's going on YouTube? If you're somebody who's looking to buy a house but you don't have the money saved up for a down payment, or maybe you're somebody who has capital in the bank, however you don't want to deplete your capital and be house broke by the time you move into your property, well, definitely watch this video, because in this video I'm going to be going over the Chenoa Fund, which is a down payment assistance program that has a forgivable and repayable option attached to it. So if you're looking for capital to buy your very first or next property, watch this video to the very end so that you are fully informed on how to take advantage of this program and purchase your very first or next property. Now, my name is Art Smith, MLS number 2013410, and on this channel we talk about personal and real estate finance in order to help you build wealth and increase your overall net worth. So if that's something that you are interested in, do me a favor and subscribe to the channel. And if you find value in this video or any one of my other videos that I have here on this channel, do me a favor and smash that like button so that YouTube knows that this is good content and can be shared and distributed to more people just like us. Now, again, if you're somebody who is looking for capital to purchase your very first or next property, then this program might be the answer that you are looking for. The Chenoa Fund is available in all states minus the state of New York. So in all of the other 49 states, if you are living in that state and you're looking to purchase a property, then this fund is going to be available for you. Now, if you want more information about this fund and its origination and what it's all about, I will link the direct website to the Chenoa Fund in the description box below for you to read more into this fund and program. However, if you're looking for straight data points on how to qualify for this program, definitely watch this video to the very end, because that's exactly what I'm going to be talking about here in this video. So let's start off with the minimum qualifications for the Chenoa Fund. Now, the minimum FICO score for this down payment assistance program is going to be 600, and the maximum debt to income ratio on the front end, which is going to be your housing payment, is going to be 38%, and on the back end is going to be 57% if you have a FICO score of 620 or higher. If you have a FICO score of 580 to 619, then your maximum DTIs on the front end, again, your housing payment is going to be 38%, and on the back end is going to be 45%, and that's going to be inclusive of your principal, interest, taxes, and insurance, as well as all of your other consumer debt like your auto loans, personal loans, student loans, as well as credit card payments. Now, the maximum number of units at the time of me shooting this video is going to be 2 units. So you could purchase a single, detached, or attached unit, or you could purchase a 2-unit like a duplex. The maximum loan amount at the time of me shooting this video is going to be $766,000. However, we are at the end of 2024, so the new loan limit going into 2025 and beyond is going to be $806,500. Anything above that number is going to be considered a jumbo loan. Now, you may be able to qualify for a higher loan amount, higher than $806,000. However, that is going to be dependent on the city and county that you are looking to live in. Now, this program is available for first-time homebuyers and non-first-time homebuyers. So if you're somebody who owns a property right now and you're looking to get into your second or third property, you can use the Chenoa Fund to purchase that second or third property. Now, the great thing about this program is that there are no income limits on this program. So whether you're making $50,000 a year as far as your individual or household income, or making $500,000 a year, you still can qualify for the Chenoa Fund. Now, another great thing about this program is that gift funds are allowed, which is going to be very valuable, and I'll talk a little bit more about gift funds later on in this video and how you could utilize them in order to purchase your very first or next property and get into a really good deal and help you increase your overall net worth and build wealth for you and your family. Now, there are 2 different options when it comes to down payment assistance for the Chenoa Fund. One option is going to be the repayable option, and the second option is going to be the forgivable option. So let's go ahead and talk about the repayable option first. Now, the repayable option comes in 2 different flavors. You could either opt for the 3.5% or the 5% borrowed amount. The 3.5% is there to cover the remainder of your FHA loan down payment requirement, and the 5% option is there to cover your down payment as well as some remaining left over for your closing costs. Now, I do have to add, for either the repayable option or the forgivable option, both the 3.5% and 5% down payment assistance option can be used to cover your down payment and closing costs, or your closing costs entirely. It's not just exclusive for one or the other. So again, you could use the 3.5% or 5% option to cover partially or fully of your down payment and or your closing costs. Now, the repayable option, regardless of if you borrow 3.5% or 5%, it is going to be a 10-year term. And the great thing about the Chenoa Fund is that the interest rate is going to match your first mortgage. So let's say, for example, that you purchased a $500,000 property and you're looking to take advantage of the 3.5% 3.5% down option. 3.5% of $500,000 is going to be $17,500. So that $17,500 payment that you would otherwise be making at the closing table when you purchase your first or next property is going to be attached to your mortgage or attached to your home in the form of a second loan or a second mortgage. And again, that interest rate is going to match your first mortgage. So let's just say, for an example, that you purchase a $500,000 property and you opted for a 6% interest rate. You would pay 6% off of your first mortgage and 6% off of your second mortgage. Again, in this example, since you're going to be borrowing $17,500 for your second mortgage or your down payment assistance program, then that would be amortized over 10 years and that would be fixed at an interest rate of 6%. So your monthly payment would be estimated at $194 per month. So you would take that $194 payment and add that on top of your first mortgage payment, plus your mortgage insurance payment, plus your property taxes and homeowners insurance payment on a monthly basis. So you would add all of that up, your principal, interest, taxes, and insurance, your mortgage insurance, and your second loan, and that would be your mortgage payment on a monthly basis. And then after 10 years of on-time payments, then that second loan would be paid off, and then the only thing that you would owe on your property would be your first mortgage after 10 years. Now, option number 2 is going to be the forgivable portion of the down payment assistance program or the Chenoa Fund, and I believe this is going to be the option that most people are going to be interested in. Now, this forgivable option also comes in 2 different flavors, and that's going to be the 3.5% or the 5%. Again, this is going to be of your choosing. You could opt to borrow 3.5% of the purchase price, or you could opt to borrow 5% of the purchase price. Again, your option. Now, the great thing about the forgivable option with the Chenoa Fund is that after 36 consecutive monthly payments of on-time payments, then this entire loan, the second loan, is going to be forgivable, meaning you don't have to pay it back. And after 36 months or 3 years, whether you decide to refinance or sell your property, you are going to owe no additional loans aside from your first mortgage. So it's also very important to understand that you're going to have a lien on the property, and that lien is going to be in the amount of the down payment assistance program or the down payment assistance fund that's going to be in the second position to your first mortgage. And the only thing that's going to stop the lender from collecting this money is the verbiage that's within your loan agreement. So if you opt for the forgivable fund, make sure that the loan agreement spells out that after 3 years or 36 months of on-time payments, the borrowed amount is void and you no longer owe the lender in the case that you refinance or sell your property in the future. Now, if you want more information and you want to apply for the Chenoa Fund or this down payment assistance program, I will link the direct website to the Chenoa Fund in the description box below. Now, a couple of other key factors and notes to point out about this down payment assistance program. Although there are no income limits in order to qualify for this down payment assistance program, in the past there has been verbiage from other blogs and content on the internet that there is an income limit of 115% of the area median income in order to qualify for the forgivable option on this down payment assistance program. Now, after my research into the Chenoa Fund, I couldn't find any verbiage or language that supports this claim on income limits. However, that has been out there in the past, so this could be possible either now or in the near future when it comes to income limitations. And also expect to pay 1 point higher on your interest rates on the forgivable portion of this down payment assistance program. So let's stick with the example of if you were to purchase a $500,000 property and the market is showing us a 6% interest rate. So if you opted for the repayable option on this down payment assistance program, then you would be quoted 6%. However, if you opted for the forgivable option on this down payment assistance program, you would be quoted 7% as an example. Also, since this program is underwritten as an FHA loan, expect to pay mortgage insurance on a monthly basis through the life of the loan and expect to pay an upfront mortgage insurance premium of 1.75% at closing or finance into your overall loan on this home purchase and loan and with the Chenoa Fund. And again, as I already mentioned, you have 2 different options, and that's going to be the 3.5% or the 5% option. And those options could be used to pay for partial or full of your down payment and or your closing costs. So bringing back the gift funds that I mentioned earlier in this video, if you have gift funds from a family member that's going to support you with the down payment portion in your overall home purchase, if you opt for this down payment assistance program of the 3.5% or 5%, then you could use that fund or loan to cover 100% 100% of your closing costs. So technically you could use the FHA loan to cover 96.5% of your home purchase, have a family member gift you 3.5% for the down payment, and then use the down payment assistance program to cover 100% of your closing costs to not come out of pocket whatsoever for your first or next home acquisition or home purchase. Now, hopefully the information in this video was valuable to you. I'm going to go ahead and conclude the video here. If you have any questions, do me a favor and drop your questions in the comment section below. Again, I'm going to have a direct link to the Chenoa Fund in the description box below. I will also list my email in the description box below just in case if you have any questions that you want to address to me privately. And again, if you haven't done so already, do me a favor and subscribe to the channel. And if you found value in this video, do me a favor and smash that thumbs up button. Other than that, thank you so much for watching this video, and I'll see you on the next one. Goodbye for now.